Okay, we're back in here looking at the charts today, and we're going to have a discussion on accepting variance, which is psychologically very important to success as a trader. And it's not the sexiest sounding thing, but it is very important, which is why I'm putting this in the Serious Alpha playlist. And I will tell you, by the way, welcome and fam, much love, Trev here. Not financial advice, not me even encouraging you to trade. I'm telling you that as a professional Magic the Gathering player, and you don't need to know anything about Magic the Gathering, but I'm going to use some analogies from that. It's a card game. I was essentially a professional gambler, a professional analyst, and in tournament play and playing the game, you have all your analysis, and then you have to go out and accept the variance. And players who could not accept the variance couldn't they couldn't stick to a strategy, which is like not sticking to your system, and then they also couldn't get over things that happened which prevented them from executing. So in trading, you need to truly embrace the randomness and accept that there's things you can do to optimize, but it comes down to a point where there's nothing you can do to prevent getting stopped out sometimes. There's nothing you can do to just you didn't necessarily do anything wrong, but it's also not unlucky at the same time either. It's just something that happens. So we're going to get there. Now we're going to get there by looking at the charts and going over some examples and drawing some analogies. So the first thing I want to show you guys, as we're just going to look at the Bitcoin and Ethereum charts today, is what am I actually, what's the pattern that I'm trading? Let's go to some open space somewhere. So I'm trading a swing failure pattern. It's not so important you understand this or that you even trade this, but just so that we can understand where the variance is coming from. So a swing failure is where you have you have a swing high to a swing low, right? Okay, swing high. Let's put this in 12. A swing failure pattern is a great pattern to trade. It is low risk and gives you a chance of swing high, a chance of picking tops and bottoms, which is psychologically nice and also um, and is also makes for entries that you can hang on to. So, the way price moves in an uptrend is you go from a swing high to a swing low, and then you go to a new swing high, right? And then you go to a new swing low, and then do a new swing high, right? This is an uptrend. So a swing failure is a potential trend reversal pattern where you go from a swing high to a swing low, and then you fail to make a higher high. This is a swing failure. There's also a version of it. The version that I trade is something like this, but essentially it is a way to, like, price, for whatever reason, price wasn't able to hold this new high, right? It made a new high, it didn't hold it. Now, there's a couple ways variance plays into this. So the first one is if you could wait for a price to come back under this level before going short with your stop loss out here. This is not how I trade it, but it's a good and common way to do it. And you trade it something like this. Where does the variance come into play? Well, it comes into play when price actually does this. It was just a pullback. It took out the breakout traders and continued on. The way I trade it is a little bit different. I look for other evidence that I think we're going to have a swing failure. And I just put a limit order up here. It gets me a better entry, but there's two things that can happen. Or three things that can happen for variance causing me to lose. Obviously, variance can cause me to win. The first is price just continues on and I take a quick loss. The other is price doesn't quite fill my limit order and continues on and I do not get to in the trade. Another one is price stops me out and then comes back and it would have been a winner. And then the final outcome is I get filled and I go and I get a winning trade, right? So those are elements of variance, and we're going to go and look at the chart. But a couple things that I'm keeping an eye on are not getting filled, because a lot of the times it doesn't fill, and getting stopped out. And I'm trying to find a balance where I can maintain a high risk reward and set the optimal distances where I'm likely to get filled but not likely to get stopped out while maintaining a high risk reward. So that's something that I'm trying to do in my system. Now, let's go ahead and look at the current Bitcoin price action. Okay, so I caught the swing failure at the top, where on this day, price could not make a higher high and hold it. I anticipated that that would happen based on where we were on the chart and what the price action had been, and I closed that right around here, around 19,100 for a 7.5 to 1 risk reward. Okay, that's great. Now, I've been trying to catch a long swing failure at the bottom to carry up through these highs is what I've been trying to do. I haven't been in a trade. We can pull out my executions for Bitcoin, and I could show you that my system calls for a lot of waiting and nothing happening. So, come on. I'm trying to go to the trading panel, paper trading, connect. Let's look at executions, trading settings, just so you can see that I think there's a couple break-evens or small losses here, but hey, I caught this swing failure right here and covered up here for a 6 to 1 risk reward. I caught the swing failure right here for a sell, and I covered it down in here for a 7.5 to 1 risk reward. Okay, that's what it looks like when it works for me, but when it works for me, guess what? It's variance. It's lucky. I don't always get that. Commissions, trading settings. Let's turn this off. Executions. Now, we got this big candle. This is what I personally look for. Now I put a limit order under this candle because I'm looking for a swing failure now. We had a swing failure. And depending on how the candle closed, I would have liked to be in this, but now I'm looking for another possible swing failure in the next couple days where, okay, it feels it's a lot safer to long now because we took out all of these stops and there's a big juicy target up ahead. So we actually did have a swing failure where we put in a lower low on this day, but I just barely didn't fill, right? I just barely didn't fill. And that's something I need to accept, and it's not unlucky. Now, here I have data of all the times in the last 2 years, roughly, that there has been a Bitcoin swing failure that was tradable. This one was only, so what I'm measuring is how far it goes past the level, right? This one that I got in, it went 0.9% past the level that it was swing failuring. This one went 1.23%, right? There's a range of outcomes where it goes a little bit past, it goes a lot past, and I'm trying to catch the sweet spot. So if we look at Bitcoin, here's a list on the left of all the different swing failures that have happened over the last couple of years. 0.06% is actually the smallest one that I've observed. It ranges from 0.06% to 4.5%. You can see most of them are between 0.5% and about 2.5%. So my system only catches these trades. My entry is at 0.5%, so it catches almost all of them. Some of them don't fill. My stop loss is 2%, so that protects me from 2.5% past the level. So if it goes past 2.5%, I get stopped out. Now I'm accepting this. There's a cluster down here from between 2.5 and 4.5%. I found that if I increase my stop to include this, my risk reward goes down too much for it to be worth it. So I concede those. Okay, so I didn't get filled on my Bitcoin. Is that unlucky? No, it's not unlucky, and there's not really anything I can do about that based on my system. It doesn't make me want to change my system. So now let's look at ETH. ETH, I've taken several losses on ETH, actually. I've taken 3 straight losses trying to catch a swing failure on the downtrend. Now, similarly, I caught the swing failure on the highs. However, unlike Bitcoin, I didn't hold it very long. And this is real bad because it went 30, it went about 12 to 1 in my favor. So this is a reminder to myself, I need to hold on to my winners for longer targets because this was an amazing entry that my system produced where we had a swing failure where we went, how far past the level did we go? We went 2.1% past the level before reversing and going 30%. Here's another one where we went 1.5% past the level before running another for about a 10 to 1. So this is what I'm trying to do. Now, just gonna throw a check in here so I can remember. Now, I've taken a couple losses coming down. I've taken 3. The first one, I didn't trade this one because guess what? It didn't fill. It went 0.52% past. I have the data for Ethereum here too. Here's all the Ethereum swing failures. This one is a little bit different. Most of them are beyond 0.8%, and then less than about 3.5%. So I'm only trying to catch these ones in my system between 0.8% and about 3.3%. If it doesn't go far enough, I don't get in the trade. I miss out on a winner. If it goes too far, I do not get in I get stopped out and I have a loss, even though it would reverse and come back in my favor. Now, I know from the math that if I try to catch everything, then my risk reward is not worth it. Yeah, and the annualized return goes down, and the corresponding increase in the win percentage is not worth it. So this one I didn't fill, 0.52%. It's on my data set right here, or 0.54%. It's the second least. I got out of this. I didn't have a limit order because it advanced about a 3-for-1. I decided, hey, it's probably not worth me trying to stay in the trade. Now, this one, I lost this one because it went 3.35% past the level. Okay, that's on my data set here. ETH 3.35% level. It's in the about the 90th percentile of how far it tends to go. Now I take another loss right here. Where this one went, yeah, this one went 3.34% past. And then this one went 3.34%. I guess I need to have them both on there. So that was, yeah, this was the loss here, the first one. The second loss, and this one I probably may have been an avoidable loss because I'm gonna not get into the details too much. but just because sort of on the way the chart looked, like it was maybe more predictable it would go farther. But this one went 4.68% past my level. So if we look at the, we go back to my data here. So there I have 45 data sets, or datums in my data set, right? Datums is data. I'm trying to catch anything that's between 0.8% and 3.3%. So the last four, we had a 0.5, which was in here. Then we had a two like 3.3 and 3.5s, which is out here, and then a 4.6. So of the last four instances where this happened, it happened. I just didn't capture it. And then for Bitcoin as well, the last one was in the small sample that's before me. Now, these were all winnable. These were all winnable trades, or for the most part. This one actually wasn't. Um, this one would have been. So I do like to hold for longer. It depends on the chart, but typically, if we go 2-for-1 risk reward, which is 5%, I'm either taking profit or more likely I'm setting stop to break even. So this one, if I get in there, would have been a break even. This one, if I got in there, it moved about 8-9%, which is 3-to-4 risk reward, which is at least break even, if not a profit. And then the current one we're in, I don't know. Now, for Bitcoin, if I had gotten in here, I'm using a 2% stop loss, but the same principle. It's moved about 3-for-1, 3-to-1 in my favor, so it would be break even. Now, now we're going to talk about psychologically and philosophically of like in Magic the Gathering, when you're playing a card game, you want the right distribution of spells and lands. Now, I was just playing last night, and I had a couple games where I didn't draw enough lands consecutively. I did not draw enough lands. Now, the amateur who does not accept variance, first is they put more lands in their deck. And trading would be I lost I took 3 straight losses on ETH and didn't get filled on Bitcoin. I'm changing my system, right? I didn't draw enough lands 4 times in a row. I'm changing my system. That's the amateur. The professional knows when to. It's not like you're not taking responsibility, but you're accepting variance that, hey, this is the right number of lands to play. I'm not going to change anything. I've done the math. I have the data. I know, and I'm not going to change anything. Okay? Now the second step is you accept it and say, okay, I couldn't do anything. My system says this is what I'm supposed to do, and it's super unlucky that I got one, like that everything has been standard deviations outside the norm, that like I keep getting things that are in here on the outsides and dodging the middle, right? It's frustrating. Well, the amateur is going to say, I got unlucky. I'm getting unlucky, right? It's super unlucky to have one here and 3 out here and nothing in this big middle section, which any of these is a win. Like, that's so unlucky, right? It's not unlucky. It's what happens. It has to happen. You trade long enough, you trade hundreds of times, it's going to happen. It's not unlucky. It's variance. It sucks, but it's destined to happen. It's not bad luck. And that is important because when you think that it's unlucky or you think I'm getting unlucky, it causes emotional reaction. And when you have an emotional reaction in whatever you're doing, it causes you to make mistakes. And the main thing is it prevents you from executing moving forward. Um, Tiger Woods, right? They say one of the greatest things about Tiger Woods is obviously was a great technical golfer, but what made him great was his ability to forget his mistake and move on. If you're too fixated on your mistake, you miss out on the next trade, right? Or you're too fixated on not mistake but getting unlucky, you move on to the next trade. So I'm looking at the data and I'm like, feels sort of unlikely, but it's also I'm not going to change anything about it because I'm looking at it. Those new data doesn't change my data set really at all. And I'm interested in um, doing nothing but continuing my system based on what I'm seeing here. And it's not bad luck though. It's built into my system. It's going to happen. I could have another one out here and then another one in here and then just keep missing. Or I can have ones that don't really run too far in my favor and I need to stop out. Whatever it is, it's okay. So that's how you need to think about accepting variances. You know when you need to change your system and you know when you don't. And you know when you don't because you have a data-backed model that tells you that this is okay. And then when things go against you, it's not bad luck. It is variance, but it's not bad variance or bad luck. It's just what happens. The wind's going to blow in your favor sometimes. Other times it's not. So I hope you found that helpful and I hope you found that useful. And it's not going to stop me from I have another valid long here because we still have cleared out all this liquidity. We took out the stops from September 19th. So I have my limit order for Bitcoin. It doesn't change anything. I'm not changing my parameters. 2%, 0.5%, aiming up here. 7.5 to 1 risk reward. Same with ETH. And I'm trying once more. I actually have a short up above because we cleared these out. This is valid for a day or two. And I'm focused on these trades now. And I have a long, and yeah, I'm not too worried about it. So I'm going to focus on these trades, not worry about it. And by the way, if you're looking at this and you're saying, hey, it would be you're just buying something as it's going down, you're right. That's part of my strategy. It doesn't always work. It would be nice if I was holding this short all the way down, which I'm supposed to do, and I did do for Bitcoin. And but these are winnable trades. I'm not buying because it's low. I'm buying because the moment price goes past the previous swing low is someone else is forced to sell to me, and I want to interact with forced buyers and forced sellers. That's what my strategy is all about. It's not lines in a chart or swing failure. It's buying from forced sellers and selling to forced buyers. So if I buy right here, I'm buying from forced sellers. If I sell up here, I'm selling to forced buyers, buy from forced sellers, and vice versa. I would be selling to forced buyers right up here and buying from forced sellers down here. So that's why I'm doing what I'm doing. Anyways, hope you find this video really useful. If you do, then let me know. That's all. Peace and much love.